Hi guys, this is Forex with Temilo and you're welcome to my channel. In this video today, we'll be talking about how to use demand and supply to trade gold. I've dropped the part 1 of this video where I used the demand level to show you an example of how to use demand to trade gold. And today in this part 2, it's going to be about using supply zones to trade gold, how you can capitalize on supply zones to catch a sell trade in the foreign exchange market. Okay, so now if you want to analyze your chart, you always want to start from the higher time frame. Higher time frame can be from the daily time frame, from the 4 hours time frame, or from the 1 hour time frame. Okay, so now why are we starting from the higher time frame? We are starting from higher time frame so that we can see a clear picture of what is going on our chart, because the higher time frames usually have a more clear bias of the direction of markets. It always shows you a clear market structure, whereas the lower time frames can cause a lot of confusion if you are trying to mark up your structures on the lower time frame. So you want to see a clear picture of your pair on the higher time frame first before you go down to the lower time frame. Okay, so just as you can see, and you can see that gold pulled up right here, then came all the way down and is reacting off from this demand level right here. And looking at this structure right here, if you're actually on the chart trading gold from here, this is a good demand level to buy from actually. So as price was pushing all the way up, price was coming to fill all of the imbalances that was left behind. The imbalances right here that was left behind when market was pushing here, you can see price has now filled it up. So at this point in time, if you were on the chart trading gold, actually you might be looking to take a sell trade from here, because this is now a supply level that we can actually get a sell trade from, for price to actually come to fill up this level of imbalance, or to this level of imbalance as well. Okay, so now that brings us to what we call the confirmation entry. So before you get into any supply or demand zone, before you just get into an aggressive entry, so sometimes you want to make sure you are looking for confirmation entries. Okay, so not every time will the market give you confirmation entries actually. So sometimes you just need to take your aggressive entry, but most times it is advisable for you to always wait for confirmation entry. So if you had waited for a confirmation entry around the zone, I'm very sure market did not give a confirmation entry for a sell trade. Okay, so and as you can see, this supply level has been invalidated. Price has now broken above it, and if you look at the bigger structure of price, you can see that over time, when market was pushing down from right here, market created this liquidity area right here. Okay, so this zone right here is liquidity zone, and once price has broken above this supply level right here, we already know that price is coming to grab all the liquidity that was sitting right here. And the next zone that we should be looking at for now is this supply zone right here. And as you can see, this supply zone has imbalance as well. So price was not efficient at this level. We had imbalance between that zone. This particular point now, all you need to do is wait for price to come into this level of supply. And what do we do in levels of supply? We either take an aggressive sell entry. Okay, so now you can set a sell limit order, have your stop loss right there, and take your sell if you are comfortable with the stop loss that is right there. But if you are not comfortable and you are not sure if price will invalidate this zone, then you should wait for a confirmation entry on the lower time frame. So now let's just see if price will get to that zone. As you can see, price has now tapped into that zone. So once price taps into that zone, now you want to be on your chart at that particular time. Okay, that is the main reason why you should set an alert right there. So now that price is in our supply zone, the next thing now is for you to jump to a lower time frame and start marking out your structure once price gets into your zone. So, and as you can see, market pushed into this zone. So the first low that you should mark out on this chart right now is this low, because now this low was the one that pushed price aggressively into this supply region. So now, at this point in time, if we are going to sell this market needs to break this low to give us that confirmation that we are now going, that the structure of this market is changing. Okay, so you set your low right there, and this will be your high right at this particular point. So now the market has taken out this high, you then need to mark out the low that broke above this high, and this low right here was responsible for a break of structure at this high. So now we are no longer focusing on this low, since we now have a new high. So this is our new high, and this is the low that push markets up. So before we can sell this market, we need to see a break below this low. So let's see, are we going to break below that low? Yes, and as you can see, market has broken below this low right here. And when market broke below that low, market left behind this imbalance right here. Now, for you to take a sell trade, you can have your sell at the midpoint of this imbalance, or probably at the open, and your stop loss will be at the swing high, the last high that we have right here. Okay, then now for your take profits, now you want to go back to a higher time frame, probably a 1 hour time frame, to go and look for possible points of interest zone. And as you can see, we have this massive imbalance between here, and this unmitigated demand level. So price will later trade down into these zones. Okay, so now let's just return to the 15 minutes time frame or the 5 minutes time frame. So at this particular level, as a day trader, for me personally, every day I always look for 1 to 3 RR trades to take, and sometimes if I can get 1 to 5 RR, then that's good as well. So if we get into the trade there and stop loss, we have 1 to 3 RR at this level right here. Okay, so now let's see if we get tapped in, if price will come back into this imbalance area right there. Let's see. And as you can see, it came back into the zone, and we are now in the trade. So now, and as you can see, let me take this off. The way I trade at this particular point in time, I will no longer be in this trade, and probably around 4 p.m. I'm already out of my trades. Okay, so now we are going to analyze this chart as if now we are in a new day. I always start marking out my trades, or start my analysis during the London session. So let's move to the London session now. The London session will be outside of this box. Once price comes outside of this box, okay, so price is still doing its thing. I will not be trading at this period. I'll probably be sleeping at this particular time. So now we are now in the London session. So at this particular point in time, I can see that my high, the low that gave us this high, has been broken, and during the Asian session, my point of interest that will likely take my trade has been tapped. So, and market is now away from this zone. So now I always make sure my Asian range high is taken before I sell. So on this particular day, coming into this market, I'll be waiting for market to push up above this Asian range high before I take my trade. So this will no longer count. Okay, so I just need to be patient now. This is the London session. Let me move to a higher time frame. Market again broke another low right here. So now this is a new day at the London session. Now we can see that market has created a new Asian range high right there. And now the way I will now be seeing this now, I'll be seeing this as a liquidity zone that price will likely grab. and this zone is still resting right here as well. So at this point in time, I will wait for price, take out the Asian range high. So now, as you can see, the Asian range high that I was waiting for to be taken has now been taken right there. Now I'm more confident in this trade now. The liquidity slash inducement that market created at this level has been taken as well. So I can move down to a lower time frame and start looking for a break. So looking for a break of structure now, you can see that this low was responsible for this push into these highs. Okay. So now for me to take a sell, I need this low to be broken. So now we have that break of structure right here. And now all I need to, we did not only break this low, we also took out this low as well. So at this point now, I need to be looking for an entry opportunity from this area, probably a supply zone or imbalance. So coming now to the 15 minutes time frame now, I can see that we have imbalance at this level right here. Can see that imbalance. So now I can take a sell trade from the 0.5, the 50% of this imbalance. Then my stop loss will be at this swing high right here, and my entry will be at that point at this level. Then for take profits now, I'm only looking for 3RRR. I think I would like to step out of the trade at this demand level because markets can reverse from this level. So doing this now, I just need to refine my entry the more. Yeah, this is about 3RR at this level right here. So my entry will just be right here. So now all I need to do is now wait for price. I can set my sell limit order, but as you can see, market has gotten to my take profits and I was not tapped in, but I'm still having this zone marked out as my entry points. So this is yet another day. Okay, so now that we are in another day, so this is, you can see how I approach the market on daily basis. So on a new day, I think I'll still be looking for that sell trade right there, because overall market is trading from a supply level. So I'm here to get my 3RR trade for now. And yet another new day. We're in another new day, a London session now. So because we have this imbalance left here, I know markets will still come to clear out this zone right here. So market has taken out the Asian range high now. Okay, now so each day new analysis. So as you can see right here now, on a higher time frame now, I can refine my entry to this level right here. And now market has created this area of liquidity, or what we call inducement right there. So now I believe price will come up. So now we are in another day as well. That's the Asian session. We are now in another London session of another day. Okay, so this is almost even like a back test trade right now. So now I'm still waiting, and as you can see right there, market tapped into this zone. So this is why you need to be very patient in trading. Around this zone is my 3RR if I should have my entry right there. So, and now you can see that when price was pushing all the way up right here, market left this level of liquidity as well. So now this will be my take profit region. Let's see, are we going to, will market get to my take profit? Market is pushing down now. So at this particular point, this is yet another new day. Again, market was slow on this particular day, but because I got a good entry, I might just leave my trade overnight on this particular day. So there are times I don't like to leave my trades overnight, but if I'm able to get into a good entry trade, I might actually leave the setup to play out. And as you can see, the 3 hour trade was gotten just by following from the daily time frame, just by identifying a supply zone from the daily time frame and going on the lower time frame to look for entry opportunities. Okay, so you can see right there, it got the first entry at this point, but because it was past my trading hour, I did not take this came on another day, and this entry is also valid. But then I still waited for extra confirmation and I was able to get it. So this is the supply aspect of using supply and demand to trade gold. Okay, so you can see that it actually works. And if you are a swing trader, all you just need to do is go on the higher time frame, and at this level of price, just look for imbalances, look for demand zones where you can continue holding your trade to. But because I'm a day trader, I want to get in and get out every day. So that is it, guys, using the supply aspect to trade the gold pair. I hope this video was of value to you, and till next time.